In the past 5 years, Alibaba's stock price is down by almost 55%. And just about 5 years ago, in October of 2020, this stock was trading at over $300 per share. However, from that time period till now, the stock at one point dropped all the way down to $63 and has since rebounded by almost 100% to the current stock price. So, in today's video, we're going to be talking about a number of different things with Alibaba. We're going to go over the Chinese economy. We're going to talk about new tech that Alibaba has released. And then we're going to go over their upcoming earnings announcement. And I'm going to give my opinion on where I think the fair value of this stock is currently at. But let's start with Alibaba's new tech. They announced that they are going to be launching an AI powered headset similar to that of Meta. The glasses are expected to be most similar to Meta's glasses that they partnered with Ray-Ban on, which look like the ones that are pictured here. And these glasses are able to stream music, make phone calls, and even translate languages. And in my opinion, the headset market has a serious opportunity in front of it. It has the potential for disrupting the phone market. There are so many things that a headset can do for their end users that basically match what smartphones currently do. What I think the next step is, or maybe not the next step, but at least a few iterations down the road, is potentially developing glasses that look very similar to glasses that you would already wear. And that's what they have done with Ray-Ban. However, those glasses don't have as much tech built into them. I think that over time, Meta, Apple, Alibaba, these companies are going to look to shrink those headsets down. And at one point in the future, we may even see headsets the size of contact lenses. And this is ultimately why I bought into Meta heavy back in 2022. I saw this as a serious threat to Apple. Meta was looking for their way to get into the hardware space to really build their platforms out on, and headsets were the clear number one favorite for Meta and the work that they were developing. And Apple saw this and responded by making their own headset. However, it missed the mark on cost. Users did not want to pay the $5,000 that they would have to pay for the Apple headset. And that ultimately drove away a lot of people. However, Apple did open the door to a lot of possibilities of where headsets could head in the future. So if Alibaba is getting into this market, that could be a big catalyst for the company moving forward, especially if things play out as I see them playing out over the next 10 to 15 years. I think that's of the amount of time that it's going to take for these companies to develop an end product that really matches what users are looking for. And at the end of the day, Alibaba does not have to spend a ton of money on R&D. They can rely heavily on US companies spending a lot of money on R&D, and then they can copy those products. Because of the Chinese government and the restrictions that they have on place against outside companies coming into the Chinese market, Alibaba kind of has an advantage over these US companies where, again, they can just copy the technology, implement it in China, and sell to a large customer base. However, there is a major downside to this, and that is the fact that Alibaba is very reliant on the Chinese economy. And over the last 2 to 3 years, the Chinese economy has been in a terrible position. We have seen China's GDP growth rate slow significantly, birth rates fall off a cliff, and the housing market get completely decimated. And overall, this has had a massive negative effect on Chinese consumer confidence. This year, China is targeting GDP growth of 5%. In the first quarter, they were able to grow by 5.4%. And then in the second quarter, they grew by 5.1%. So right now, they are well on target to hit their goal. However, Chinese economists are projecting that GDP growth rate will slow significantly in the third and fourth quarter. They're projecting only 4.5% growth in the third quarter and 4% growth in the fourth quarter. With one economist stating, we see a demand cliff in the second half driven by multiple factors, with the most notable factor being the US tariffs. One thing you have to keep in mind is China is not a consumer-based country. They spend a lot of their resources producing goods for the rest of the world. So at the end of the day, when the Chinese economy is weak and consumer confidence is weak, that has a big effect on Chinese companies because they are not going out there and seeing the demand from customers that they have previously seen. And this is one of the things that occurs that is very different than the US. The US consumers, no matter what is going on in the broader economy, they are always out there spending money. In China, when there is weakness, a lot of Chinese consumers actually tighten up their wallets much more severely than you see in the US. And the Chinese government is trying to address this. They are lowering their interest rates to try and increase consumer confidence. However, this really hasn't had an effect quite yet. They have taken very small steps to lowering their interest rates because they're trying to avoid invoking a lot of inflation into their economy. However, in my opinion, I think that that is kind of a mistake. I think they need to take a little bit more of an aggressive approach to lowering their rates and potentially do something similar to what the US did a couple years ago by dropping their rates significantly to get back to increased growth. Ultimately, if they do take these steps, it would have a big impact on Alibaba. Alibaba is expected to announce their next earnings somewhere around August 13th or even August 14th. They haven't formally announced when their release date is. And right now, analysts are expecting them to post EPS of $2.14, which is down around 6% versus what they posted a year ago of $2.28. For Alibaba's top line, analysts are expecting revenue to come in at $35.36 billion, which is up almost 5% year over year from $33.78 billion a year ago. In my opinion, I think these estimates are a little bit low. There's a number of reasons that I believe that. First off, if we look at last quarter, we can see that they grew their revenue by 7% year over year. So to me, a 4.5 to even 5% growth rate for their top line is a little bit low. I honestly think they should grow at least 6, maybe even 8% for their top line numbers. And for the bottom line, they increased their EPS numbers by 23% year over year last quarter. So I honestly think that they could probably grow their EPS in this upcoming announcement. The other big thing is Alibaba has a large cloud business. They are actually fourth in terms of overall cloud market share, and this is something that people often overlook. Last quarter, their cloud business grew by only 18 or 19%, and with a lot of these other large tech companies growing their cloud by 30%, I honestly think that Alibaba should probably be able to grow this side of the business by anywhere from 20 to maybe even 30% as well. But the thing with Alibaba is they have a couple of different factors that will move this stock in a massive way when they end up flipping. The first is what we've talked about so far with the turnaround of the Chinese economy and the effect that will have on Alibaba's earnings. But the second thing that will come along with that is a change in sentiment towards Chinese companies, which will ultimately affect their valuation. Right now, Alibaba is trading at a forward PE ratio of a 13.68. For 2026, analysts are expecting anywhere from $6.92 to even $10.44 of EPS for Alibaba. The baseline or average EPS estimate is $8.67. If we take valuations of where this stock is trading at right now of between a 12 and a 15, that results in a stock price between $104 and $130 per share. However, this is not where things are interesting. What gets interesting is when you consider these two flips that could occur. Here is the first flip. Higher than expected EPS numbers. Let's say Alibaba actually comes through with around $10.43 of EPS. If we assume that they trade at a 12 to 15 PE ratio, that would result in a stock price between $125 and $156 per share. Again, this is nothing that crazy or out of the ordinary. This is assuming current valuations. But what gets really crazy is when you start factoring in a change of sentiment and an increase in valuation. When you compound these two things, EPS expansion and valuation increasing, that's when the numbers start to get crazy. Because again, at $10.43 of EPS, but a 20 PE ratio, that results in a stock price of $208 per share. If we were to consider more inline valuations to where US tech companies trade of a 30 PE ratio, that would result in Alibaba trading at a share price of $313 per share. But do keep in mind that I am bullish on Alibaba. I hold a small position in my YouTube portfolio as well as a much larger position in my personal portfolio. This is the YouTube portfolio and it is currently sitting at a value of just over $72,000. And like I just said, this is a smaller position in this portfolio. It's actually my 11th largest position. I'm up 51% on it. However, my cost basis is only $1,100. So right now I'm only up to around $1,800 on this position. Other than that stock, I also hold Google, Supermicrocomputer, AMD, Microsoft, United Health Group, SoFi, Adobe, Oscar, PayPal, Abercrombie and Fitch, Estee Lauder, United States Lime and Mineral, Zeta, and Hawkins. One thing I really like to do is buy companies on a dip, and that's really what got me into Alibaba. Right now, we have a solid return on this position, but I think there is just so much more upside for this company. So I plan to hold it until it at least gets above $200 per share. Then I might start trimming it. However, I honestly think that this company should be trading at somewhere close to $250 to maybe even $275 per share. But of course, that is all just my opinion. Don't buy a stock just because some random guy on YouTube talked about it. Make sure you are doing your own research and looking for companies that meet your risk tolerance as well as your time horizon. Let me know in the comment section down below, what is your price target for Alibaba? And while you're down there, drop a like on the video and subscribe for more videos like this one. And as always, have a wonderful rest of your day.